which is commercially sensible, we will look at it.
Okay, thank you. Can I just, is 62% of your mortgage book, is that in trackers, is it?
Yes, Deputy.
Could I just ask you, in the setting of rates, you set your variable rates and interest rates on your ordinary mortgage, how big of a role does an opinion poll play in setting those rates?
An opinion poll from...
Would you use the likes of Red Sea or people like that in setting rates?
On an ongoing basis, Deputy, we have our customers who are borrowers who want to pay the lowest rate possible, and we have customers who are depositors who want to get paid the highest rate possible.
I'm just saying you wouldn't really, it's this very technical thing of setting rates, so you wouldn't kind of go off and get an opinion poll on whether you should increase your rates or not.
We look, the setting of any rates is primarily designed about what's our long-term franchise. Are our rates competitive? Do they cover the cost of raw material?
But it's just, is it yes or no? You wouldn't really use an opinion poll to set rates, would you?
Well, I'm not sure what I'd ask the customers. Like, if I asked the customers, would you like to pay yes, I'm sure.
It's a technical process of how the market
exactly.
perform. Yeah, that's great. That's a silly answer.
Your question...
It's going somewhere.
Okay, no problem.
Just leave it. Just leave it for a minute.
Leave it. Like Columbo. Question.
Can I have two more tech questions, Chair? And I'm not even gone over 3 minutes yet.
What's the time?
You have mortgage advisors, right, at the moment. Do you set targets for those mortgage advisors in reducing the number of trackers you have?
Our mortgage advisors' job is to, where they are customers in arrears, but for the new business mortgage advisors, we sell the products. We do not sell trackers as products.
Well, like you wrote to several of your customers in October, and you wanted to share information in relation to a Red Sea piece of opinion poll. Like, to me, it's kind of trying to trick people off trackers. Like, you're implying that there's better products in this letter and that you'll be in contact. Now, if your only information is in relation to Red Sea, would you be misleading your customers that are on trackers? Or would you believe, are you aware of this letter?
What we look at on an ongoing basis, Deputy, is the demand for certain types of products. One of the things that we perceive is that interest rates, whereas the cost of money to the bank is high, interest rates are relatively low in the market. The take-up of fixed-rate mortgages in Ireland is very low. Should interest rates rise, then the customers are exposed and the bank's exposed. So we look at that.
There was ugly face of banking before, and I think we're going back that way. Just let me read the beginning of it. As a valued mortgage customer, we want to share with you some interesting findings from research that we carried out recently with homeowners like you who have a mortgage on a tracker rate. The data conducted by Red Sea in August 2012. Now, to be quite honest with you, reading this letter is you're trying to trick people with tracker mortgages into engaging with you to move to lesser or more higher interest rate mortgages. Now, to me, that's the ugly face of banking that we've seen in the 2008.
Letter into the record, Deputy, do you?
I will at a later stage. Are you aware of the letter? Did you approve that letter going out?
I didn't approve it, but I'm aware on an ongoing basis we look to see, is there a demand for fixed-rate products? Because if there's a demand for fixed-rate products, then we go and buy the money in the market to try and switch them.
So you say there's a better fixed-rate product on the market than there is currently in the tracker mortgage, and if you take it, look, sorry, just let me finish. Let me finish the question, please. So if you look at the tracker mortgages now, currently between 1.75 and up to 2.75. Taking it at 1% above it. Is there a better package than that now at the moment? Has the Bank of Ireland a better package than that at the moment?
It depends on one's view of long-term interest rates, Deputy.
Well, like, you know, certainly in the medium term, tracker mortgages for your customers are the best. And you said earlier on, you know, trackers are non-profitable. It's your interest trying to push people off trackers. And really, to me, kind of Red Sea is not something that you make a decision on what interest rates you take.
When a customer looks to switch a mortgage from a tracker to a fixed rate,
they're not looking. You're looking for them. You're looking for them to switch.
What we're doing is research on the demand for fixed rate products.
You said when a customer wants to look, you know, you're looking for the customer to change, not the customer's looking to change.
We're trying to ascertain the demand for fixed-rate products to try to design our products, because we have to try and buy that money in the marketplace.
Mr. Bowser, I would put it to you is that you're trying to trick or push people out on tracker mortgages onto a higher interest rate mortgage, which actually will then push more people into death stress. And I don't think you're acting, or your bank is acting in good faith with those customers. Now, I'll put that directly to you.
From our perspective, we have to try to ascertain the demand for fixed-rate products, because we have to go and buy the money.
Humphreys, I will have to ask you to put the letter on the record, committee, if you're going to be making a statement like that.
Okay. Well, I take it it won't be part of my time then at this stage.
I'll allow you if you go through, okay?
As a valued mortgage customer, we want to share some interesting findings from research that we have carried out recently with homeowners like you who have a mortgage on a tracker rate. The data conducted by Red C in August 2012 on behalf of the Bank of Ireland found that customers on tracker rates believe that lower payments and rates of interest are most appealing feature of their mortgage. A significant proportion, 75% for customers with tracker rates, believe that the ECB rate will increase in the next 5 years. The majority of customers, 84%, are concerned about the resulting increase in mortgage repayments. If, like these customers, you have concerns about increasing mortgage repayments, we may have options that can afford you more certainty of repayments at an affordable rate, giving you the benefits of your current low rate, but without the risk of increases over the next 5 years. And then it says, we will be calling you over the next week to discuss the options to you and answer any questions you may have. If this time frame is inconvenient, or so, we'll contact you. Please contact the following phone number. And the date of the letter is October 2012.
And just to summarise that, Deputy Humphreys, from my reading of it here, what you're saying is that the letter gives the impression that the variable rates will be betterly measured against the tracker rate sometime into the future.
And quite at this stage, which we're all aware of, the tracker rates are the most advantageous rates that we get.
Questioning.
So, could I ask you, will you publish or will you make available the questions that were put out by Red C to get this information back?
Yes, we will make that.
You'll just supply the questionnaire and the results.
Yep.
Are you happy that this letter was sent out in this manner?
The nature and background to the letter is very much around research we did with customers around ECB rates over the next couple of years, which is an important element of the tracker rate. The feedback given was that actually the ECB rates from customers would increase over the next 5 years, and we're, as Richie said, we're trying to ascertain what the customers' interest is in fixed rates to protect against that increase in ECB rates.
Well, like you actually say in the letter that you have better packages. So, like, have you better packages than the ECB, according to the ECB rate?
Depends on the view of the interest rates.
Well, have you a better one than this if you're paying 2.75?
We can't guarantee 2.75. We can guarantee.
No, sorry, it depends. I'm asking you, that's the higher rate if you're doing a trackage. Have you a better package, 2.75?
The fixed rate takes into consideration the market believes the rates will increase in the future, and therefore the cost is higher, but it provides protection.
Have you a better rate than 2.75?
It's a different product, a variable rate product by its definition. Well,
Judge, it's like little bit like your package that you get for your telephone bills or your mobile. Like I've asked you, you understand it. Overall, have you a better rate than the 2.75? Like I have to say, the person that brought this letter to me felt like they were trying to be tricked to engage with Jews to come off their tracker, and I think that's a reasonably fair interpretation of the letter.
There was no intention to trick here. What this was in response to is concerns raised in a piece of research about customers' concerns about the ECB element of their tracker rate.
Did you send these letters to your buy-to-let trackers?
We sent it to a small number of customers in the pilot to see.
You send it to your buy-to-let trackers? Or was it just people that, homeowners, ordinary people that owns their own home that has a tracker? Did you send it to the people with buy-to-let?
We sent it to a couple of hundred, about 300 customers in total, no more than 300 customers out of a book of 198,000. And the composition of who got it, I just don't have that information in hand. Sorry?
All tracker recipients.
Tracker recipients, yes.
It was all trackers. Thank you, Chair. I just think it's unfortunate by that, because I certainly believe you're putting pressure on people that are trying to convince them to move away from trackers. Thank you, Chair. Thank you for your time.